Wow, we have a very exciting video for all Tesla stock investors. This one is a little bit different because Elon Musk might be sending us a secret message, if you will, over on Twitter. Now, I think a lot of people missed this today. It just came out about an hour and a half ago, and it really has me scratching my head. Like, is there a deeper meaning to this? I'm going to give you guys my theory and what I think this means. Also, here in this video, we're going to look at Tesla stock, where I think Tesla stock could go. And let me tell you right now, it's in the mid 300s, but there's a caveat here because there's some not so great things happening in the markets today. Why are banks like Citi, Bank of America, Goldman Sachs, Wells Fargo, JP Morgan doing so poorly? Specifically, Bank of America and Citi are at the banking crisis lows back in March. If you look at where the money is going, it's staying far away from banks. There could be something deeper here, and I want to dive into that a little bit, as well as the economic data coming out tomorrow morning, some of the economic data that we got today, and what CNBC just said that I have been saying here on this channel for weeks now about the yield curve uninverting, how we could soon be heading into a recession. So this is a very strange moment in time where Tesla stock looks poised for a continued breakout. Maybe there's some really good news that could be coming by this Friday. Yeah, that's a very real potential, but the markets themselves look very poor. What's my outlook? What do I think is potentially going to happen next for Tesla stock and the markets? We have all of that and much more for you here in this video. You know how we like to do it at 9 p.m. Thank you guys for tuning in. If you are tuning in, then you are serious about your craft. You are serious about bettering your financial future. If you are, and if you happen to be a Tesla stock investor as well, hit the like button so everyone else that is Tesla stock investors watching this video knows that you are also a Tesla stock investor. So let's go ahead and get into it. Now let's start off this video with some positive news on Tesla stock before we get into things that are not so positive for our markets. Now keep in mind, I would never say to sell Tesla stock. I would never even say to hedge Tesla. Tesla looks a lot healthier than the broader markets. If you wanted to hedge, I would much prefer hedging basically anything else besides Tesla. Just like you've seen today, Tesla stock rallied over 5%. And the broader markets did not do nearly as well as that. So I just want to put a little bit of clarity here. I'm not a financial advisor. Stocks could rip to the moon again. I just think the risk to reward does not look that good in the broader markets, but with Tesla, it looks really good. I believe the odds are actually really good that we get a Cybertruck delivery event some point here in this month. We'll talk about exactly when this could be here later in this video, but I expect that'll be a positive catalyst for Tesla stock and really make investors finally acknowledge the Cybertruck is coming. It's been a long time, and you really haven't seen added value to Tesla stock and premium, if you will, based on this new product, this new category that Tesla's breaking into. I think that comes to an end once the delivery event does actually happen. Elon Musk may have just sent us a very cryptic message. As you know, Elon Musk is heavily scrutinized on what he cannot post on X due to the many lawsuits that he has received over the years. So Elon, when he wants to say something in particular about one of his companies, really about Tesla, because Tesla is the publicly listed one, Tesla is the one that you and I invest in, he has to be pretty cryptic. He can't make forward-looking statements that maybe he has done in years prior. But this I find interesting. Given Tesla stock was up like 6% today, he reposted this from Carl Tuckerson, or Tucker Carlson on X. Says episode 28. I'm not even gonna read that, but the last line says, following the money. Elon just wrote, follow the money, ... Where did the money go today? In Tesla stock. That's for sure. So is he hinting towards maybe something bigger to come. Maybe we're going to get some kind of news soon. I don't think this is too far in the realms of a tinfoil hat. I think in context to this, it really doesn't make a whole lot of sense for Elon to share this and say, follow the money. ... Maybe I'm wrong. Maybe I'm reading into this a little bit too much. But given Tesla stock just rallied 6% with almost $2 billion worth of option flows today, like 4 times the daily average, on really no news, there was nothing new significant to cause Tesla to rally 6%. I don't think it's too far-fetched to say Elon is sending us a message here. In the land of options, had 978 orders totaling $1.77 billion with a positive order value of 68%. And there was really no reason why Tesla stock rallied almost 6%. I think it does have to do with the Cybertruck upcoming deliveries, and the markets knew that. Somebody was tipped off, and somebody bought themselves a lot of Tesla stock and a lot of Tesla call options. Existing Tesla Model 3 performance orders in Germany are now shown in the Tesla app as expected delivery in April to July of 2024. Maybe a good sign that there will be a new performance Model 3 Highland. Tesla has switched back to shipping Fremont-made cars to Canada. So far, the change only appears to impact the Model 3, but could soon include the Model Y. While Tesla never gave an official explanation for the change, it is widely believed Tesla did it in order to take full advantage of the federal tax credit in the US, which require vehicles to have a certain percentage of domestic production in order to qualify. 2 hours ago, Tesla removed the Cybertruck raffle, Model 3 performance raffle, supercharger miles, factory tours, 3-month of FSD, and premium connectivity from the US referral program. It looks like Tesla has now added back supercharger miles, premium connectivity, as getting rid of those looks like a mistake. It also looks like the Cybertruck and Model 3 performance raffles are back too, so Sawyer Merritt points out Tesla may have had a bug today. The Netherlands reported 1,872 Tesla sales and a 6.3% market share for the month of September. And again, the Model Y was the best-selling car. Year to date, you are up 599% over the same period last year, and year to date, you are 285% higher than last year's total delivery number. Spain reported 727 Tesla sales for September, 90% of which are the Model Y, and 7% being the Model 3. Year to date, up 151% over the same period last year, and year to date is 179% of last year's total. So basically in any country you look at, Tesla sales are accelerating. We do have some very troubling news for GM. It looks like the estimated cost of the UAW strike is already about $200 million, and this loss could soar to the billions in the coming weeks. GM now prepares a $6 billion line of credit to cushion the cost of the ongoing strike. GM wants a 364-day revolving credit line, which will mature on October 1st next year to maintain, quote, operational flexibility, a company spokesperson said. As of June 30th, GM's total automotive liquidity stood at $38.9 billion, so it's not at risk of running out of money anytime soon, but the new credit line is a sign GM may be buckling in for a prolonged work stoppage by the United Auto Workers Union. So that is some troubling news from GM. We also have some troubling news for Rivian. If you are a shareholder in Rivian, you will notice Rivian stock is down 7% in after-hours $100 trading today after Rivian announced its intention to offer $1.5 billion in convertible senior notes. If you are a long-term investor in Rivian, that is my second favorite EV stock. I still think the valuation is way too rich for my liking compared to Tesla. I'll much rather go all in on Tesla instead of Rivian, but I do have favorable opinions on Rivian, and I do think if you are a long-term investor, Rivian needs this capital, and this is not a terrible way to raise capital. It's better than outright diluting shareholders on the open market when your stock is nowhere close to all-time highs. Oh, and I almost left out some of the most troubling news of all for GM. How could I? General Motors Chief Technology Officer Gil Golan is leaving the job after just 1 month. Whenever you see a top employee or executive at any company leave the job, it's not great usually, but if you're leaving the job after just 1 month, that is terrible. And that says there's a real problem, most likely. The UAW strike has caused nearly 30% of suppliers to lay off workers, a new survey says. This makes today's ADP employment change really that much crazier to imagine here. The ADP does not take into consideration workers that are on strike as actually being unemployed the way the government BLS report might do. So the ADP employment change came in at 89,000 net job ads for the month of September. You were expecting around 153,000 job ads. This shows very much a weakening economy, a weakening labor market, and it did not even take into consideration the thousands and thousands of UAW workers that have, in all reality, just got laid off. So that non-farm payroll report coming on Friday morning is going to be that much more important. You're expecting 170,000 job ads. If the ADP came in at 89,000 job ads, there's a potential, if the BLS report does factor in UAW strikers as unemployed, then this number could come in well below expectations. Again, a number below expectations is good, but if you get a similar number, maybe as we've seen with the ADP report, 89,000 job ads or less, that's where you could have a problem. The markets want to see a weakening economy, a weakening labor market, but not quite a recession. So if for whatever reason you were to go negative on the non-farm payrolls, if we actually lost more jobs than we gained in the month of September, boy, could you have a big problem in the land of equities. Same is true for the unemployment rate. A tick up in unemployment's not bad, but if you start to break above 4% and it looks like the trend is higher, then you start to get real panic in markets, and I think this is a risk factor you should know throughout the rest of this week. I think there's a very low chance that jobs come in higher than what we're expecting, and I think there's a pretty low chance that jobs come in around expectations of 170,000. Odds are this number comes in less than 120,000 job ads, and that might not be seen as a positive for the markets. Tomorrow, we are going to get the balance of trade that comes out at 8:30 in the morning. You're expecting a deficit of $62.3 billion. The bigger data tomorrow morning is the exports and the imports. You're expecting around $313 billion for imports and around $255 billion of exports. You're also expecting initial jobless claims. That number is expected at 210,000. If you do see a spike in initial jobless claims, I would argue that's probably not a great thing for our markets. It definitely wouldn't be a great sign for the economy and for the job market. Now, this data will affect the GDP estimates, which come out on October 26th. I've talked about this before many times, but the GDP estimate is 3%. That comes out October 26th. There's a chance this estimate comes down, and markets might say, hey, maybe growth was not as strong as we expected for Q3, thus meaning a recession could be a little bit closer than a lot of people might think. And you can see the next GDP Now update is Thursday, October 5th. This comes to us from the Atlanta Fed GDP Now tracker. Now, before we get into Tesla's charts and what could happen to Tesla's stock over the next coming days and weeks, I think you guys should, in context to what we just talked about, the labor report, the markets, kind of some of the negative catalysts, I think you should listen to these two clips here from CNBC. They're pretty short, and they go over the yield curve uninverting and basically what I've been saying here on this channel for the last couple of weeks. So I think you guys will get a lot of value out of different people's opinions that are basically echoing the same thing that I have been saying. And then, of course, we're going to get into everything Tesla, all the technicals, major levels to be watching for on the upside, what I ultimately think could happen with Tesla, when I think the Cybertruck delivery event is likely going to be, as well as last but not least, the major kind of leading indicator you guys need to be watching if you are bullish on this market, if you want to see a turnaround of stocks. There's one thing in particular that I think is very important.
It does take us to our talk of the tape, the rising rate reality and whether we're getting close to the end of the recent move. Got to think we need to be if stocks can get anything going from here. Let's ask our panel. Dan Greenhouse is Solus Alternative Asset Management's chief strategist. SoFi's head of investment strategy, Liz Young, with us as well. And so is CNBC contributor Greg Branch of the Veritas Financial Group. Everybody's at Post 9. So we got a big desk because we got a big story that we're trying to figure out. Greg Branch, is this your moment? Is your call that stocks are going to have a really rough go in the process of taking place?
I think it's starting to take place, Scott, and I think, as you know, I see another 10% downside from here. At this juncture, we still haven't seen many of the catalysts happen for my thesis to play out, and that is that consensus estimates are just too high. I am higher and longer than consensus, and that means that I see no path to an 8% fourth quarter, now an 8.3% fourth quarter, which means that I see no path to a 12.2% growth rate on earnings in 2024.
All right, Liz Young. Is Greg too negative? Because, I mean, he's been negative for a while. Market's gotten away from him a little bit. He hasn't really wavered at all, and now he's sort of feeling like this maybe is his moment.
I mean, I respect an opinion that if you feel wrong and you stick to it. I've been cautious all year. Obviously, we're getting a little reprieve today, but I think it's just that. It's a brief reprieve. Pretty big down day yesterday, scary across sectors, scary across rates, and this idea of a 5% 10-year now is not that far off. And then you start to worry about what does a 6% 10-year look like. And, you know, one of the things that I've been thinking about a lot today and will be thinking about for the rest of the week is the re-steepening of the yield curve. And I've said this over and over again. It's not the inversion that's the problem. It's the re-steepening. And we have re-steepened by a lot of basis points. Now I think at 31 basis points as we're shooting this. That's what the problem usually is.
Okay, so you're on Team Gundlach because he tweets.
I am.
Deep inverting very rapidly. Should put everyone on recession warning, not just recession watch. If the unemployment rate ticks up just a couple of tenths, it will be a recession alert. Buckle up. Is that what we should be worried about now?
So I'm going to take issue with this. I take issue with a lot of what was just said, but we'll focus on this for a second here.
Let's go.
The yield curve inverting, Liz is exactly right, and everyone who's made this point is exactly right. It's not the inversion. The inversion is the starting of the clock, so to speak. It's the uninversion, the re-steepening, if you will, that indicates you're close to a recession. But we have to ask ourselves why. And historically, the answer is because the 2-year rates in general are coming down, but in particular the 2-year is coming down because the market is starting to price in or realize rate cuts. That's not what's happening today. The curve is getting closer to zero because the 10-year is moving higher, and I'm not sure we should take historical analogies, which are not perfect parallels, and apply them to today and reach a similar conclusion. Okay. I don't think that's fair.
What do you think?
Today, actually, that is exactly what's happening. So today is different than yesterday. Today, the 2-year did come down further than the 10-year came down. So there was a re-steepening that accelerated for that reason. Right, and it's because of the weak jobs report, right? So it's all based on the Fed is going to cut sooner. I take your point, though, completely. The re-steepening that happened earlier this year during the regional bank stuff was the troublesome re-steepening where the 2-year came down pretty rapidly. That's right. This re-steepening has been because of upside surprises to economic data. My take is more so that the upside surprises to economic data won't last, especially at these rate levels. And if you get to a point where the long-term average spread between 2s and 10s is a positive 88 basis points, if the 2-year stays where it is, that suggests a 10-year of about 6%. And I don't see that as sustainable and something that we can get to without pain.
Well, long rates unmoored now from the Fed?
I would argue the Fed message of, higher for longer. The long end of the Treasury market heard it loud and clear. But this, I would say, this very recent move in Treasuries has been a little bit more dangerous. It's led by the long end. It's led by real rates. So we were already in the hard landing camp. I think the move in the Treasury market, the disinversion in the curve, I think that actually makes a hard landing a lot more likely. What stops this ultimately will be either some sort of financial accident or ultimately the lags do play out. We're not in the camp that the economy has become a lot more productive, that the economy can actually handle much higher real rates. You're looking at real rates 2.5% on the 10-year. That's going to hurt businesses. That's going to hurt consumers. It's just going to take some time. So, I do think we're nearing the end there. But, I would say volatility is high, conviction's extremely low. So it's hard to actually call the exact top.
Why do you think?
So what they just said is basically what I have been saying. As this chart goes inverted back here in really 2022, October, September, that's usually not when you need to be a little bit worried, or at least that's when the clock starts in terms of an upcoming recession. When this chart actually starts to rise again is when you have problems in the market. That's when you're getting ready for a recession. Now, when you couple that with the payroll reports that we've seen today, some of the weak economic data with the ISM services, it certainly looks like a downturn is coming for the economy. Again, a slight downturn is okay. That might be enough to get the Fed to not raise rates and maybe start to cut rates a little bit. But it's a fine line between a slight downturn and going into a full-blown recession. And you can see that here with the 10 and the 2-year yield curve inversion as well. These gray periods are recessions, and you typically see a rapid steepening right before you go into recession. Sometimes just a month to 3 months before you enter into a technical defined recession. And I do think when you kind of mix that with the 3% GDP estimate we have for 2023, something is really wrong here. Either the historical pattern since 1976 of the yield curve predicting recessions is wrong, or GDP estimates are wrong at 3%. Let me know what you think down below in the comment section. In terms of what is really the biggest leading indicator that you guys should be watching for a bullish market is definitely in the banks. Now, treasury yields rising lately has caused the dollar amount of those treasuries to decrease. So what that basically means is your unrealized losses have been shooting through the roof at an unprecedented pace. This is what caused the banking crisis back in March and in April of this year. Well, a lot of people have since forgotten about that. But if you look at some of the big banks and look at their stocks, big money certainly is not. This is a weekly chart of Bank of America. As you can see here, this was the banking crisis. Bank of America hit a low back here of about $25.91. Right now, Bank of America stock is $25.94. You're basically sitting at the low of the banking crisis. This was after Bank of America had fallen a lot. It had fallen from a high of $37 down to $25. That's a big drop for a bank of America. That's a problem. And now you have recently fallen again. So it looks like big money is really not buying the whole banking crisis being over situation. Same thing with Citibank. Citibank is breaking down to almost a new low. This again is not great. JP Morgan's doing a little bit better. Wells Fargo is doing a little bit better. Goldman Sachs is in a similar situation with Bank of America and Citi. And this goes for regional banks as well. So just looking at the flow of money here, it's not bullish on the banks. You always want to watch the money as Elon just said today. As far as Tesla stock and the upcoming Cybertruck delivery event, there's been a lot of rumors that this will be announced this Friday, and I do think there is a decent probability of that. We've been seeing a lot more sightings of the Cybertruck. We've seen a lot more demos, like literally crash demos of the Cybertruck. It looks like we should be at that point where we can get a delivery event, start getting deliveries maybe a couple weeks or a month after that delivery event. That seems reasonable to me. I believe it's probably going to get announced on a Friday. So if it's not October 6th, then it's probably the Friday after that. Tesla tends to announce these things on Fridays, so that could be October 13th or even October 20th. That's what I would expect. But based on Tesla's rally today, it could come sooner than you would expect. It could be this Friday when we get the actual Cybertruck delivery event. This was the strongest day for Tesla stock in quite some time, dating back to August 29th of 2023. Now today, you really broke above a key buy level, and that was the 50-day moving average. Your next level on the upside is 265. If you can break out above that, you're also breaking out obviously above resistance. 265 is a big resistance level, but you're also going to be breaking out of a long-term downtrending line. Okay, if you can break out above that, a long-term downtrending trend, well, then you start to really break out into some upside. And I think $300 is a big psychological level. Obviously, you're changing from 200 to 300. You tend to get a lot of resistance around big psychological levels, or even support for that matter. 250, strong support on Tesla. 240, strong support on Tesla. Do they have any significant value around those prices? No, they're even numbers. A lot of algorithms trade around these even numbers. A lot of people do as well. Same thing to the upside. $300 is going to be your next major resistance level. If you break above 265, it could be a pretty quick move to 300. And then above that, then you could be targeting 315. And if you did break above 315, then you would be approaching that 385, even all-time highs. So we don't have a lot of resistance above 315. If you get above 315, that would be very exciting. And I think the Cybertruck is one of those elusive products that we've known about for a long time that nobody really incorporates in their valuation, that I think Wall Street would start to at least assign some kind of valuation for, right? We just haven't seen anyone value the Cybertruck in Tesla models. We're like the only ones here on YouTube that assign any value to the Cybertruck today. Think about it. Nobody has said anything really about the Cybertruck because nobody knows when it's actually coming. So when it does become a reality, I think that's when you have to assign some value to it at the very least. And I think the halo effect will utterly crush Tesla's expectations for 2024, and that could start to get priced into the stock as well. 27% delivery growth, 29% EPS growth might be way too low if Tesla is actually going to introduce a polarizing new product that will grab anyone's attention on the roads here in 2024, or even by the end of this year. We should be getting some deliveries, at least in November and December. These things are not priced into Tesla stock, in my personal opinion, and that's how you get into the mid $300 level. And then I would also note that you're still lower than where you were back in August and September of 2022. So yeah, Tesla has rallied a lot from the lows, the artificial $101 low, but you're still lower than where you were 52 weeks ago, right? A year ago. Still lower than that. Just to get back to that level, you have to get to about 315. So in the grand scope of things, is this too far off of reality? I would argue probably not. But again, there are problems out there in the markets. The economy is deteriorating. The Fed is delusional. There's a lot going on right now, and there's never really been a time that I can recall that Tesla looks so good, has so many positive things going for it, and the markets just look so poor. The risk to reward on the markets is terrible. I wouldn't tell anyone to buy the QQQ or the SPY. The risk to reward just looks pitiful. But Tesla, the risk to reward looks really, really good here. the odds that you rise and rally are a lot greater than you fall or crash throughout the rest of this year and 2024. But again, Tesla does heavily trade around what the broader markets are doing. So you're kind of handicapped there. But as long as you don't see a crash in the markets, Tesla can do its own thing like you've seen today. Tesla stock up about 6%. The S&P was up 1.36%. Tesla outpaced that by almost 4x. So that is going to do it for this video. Hit that like button and subscribe to the channel if you are a Tesla stock investor, if you want to make more money, if you want to reach financial freedom as quickly as possible, or drink margaritas and Bahama Mamas on the beach as soon as humanly possible. This is your channel to be subscribed to and to watch all of these videos. Hopefully you guys learned something here in this one. If you did and you want to take it a step further, maybe come learn to trade and be more efficient, link down below in the description of this video. I send out all of my alerts in real time. You can come ask questions over there. Come be a part of the action. We will welcome you with open arms. Linked down below in the description of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.